Okay, so this video, we've already started with lots on the board. We're going to look at purchases, and GST in the general journal. Now, in the last video, we looked at someone who bought inventories for $550 cash, and we asked how much GST they paid, and then we broke it down like this. They paid $500 in the price, GST of $50, and in total, the transaction was worth $550. Okay, so let's look at the three accounts that are being used in a transaction like this. So, three accounts. You went to somebody and you pulled some money out of your pocket or out of the business's pocket and you gave it to them, and in return they gave you inventories. So there must be two accounts involved: a bank account, your cash at hand, and the second account would be inventories. Now, these are both assets. Your bank account, you gave money to someone, so your bank account went down, so your asset went down. Inventories, your inventories went up. But here's the killer. Your inventories only went up by $500. Because the value of the inventories is only $500. That extra $50 has nothing to do with the inventory. It's the tax on the inventory. So the killer is that the inventories went up by $500. But your bank account went down by $550. Now, if you've been paying attention, you will realize that there is a third account that needs to be dealt with for this transaction, and that is our GST clearing account. And you should see that the GST clearing account, or if you remember, the GST clearing account is a liability, and it's a liability that's going down. Now, you're probably saying, GST clearing account, why is it going down? Remember, I paid out money, and I paid $50 of GST to another business. Now, that GST, if you're a business, if you're paying GST out, that's a tax credit. So our liability is going down here. But it should become fairly obvious when you start going through the debits and credits. Okay, so filling out our general journal. Inventories are a debit account, and they went up. Okay, so let's give it a date. 1st of July. It's always the 1st of July. Sorry, I'm doing a transaction analysis table. Okay, so first thing that happened was the inventories went up. And they went up by $500. GST clearing account went down. It's a liability, it went down. So a liability going down is also a debit. GST clearing account. Should all fit on one line. GST clearing account, $50. And our last one here is, we'll call it bank. And our bank gets credited $550. Now don't forget to journalize. Bought, inventory, 500 plus GST 50. Okay, something like that. Your textbook will have probably better journalizing than I have there. That's it. That's a purchase and a GST in the general journal. It is complicated, but doesn't really change. If you buy inventories, this is going to be the general pattern of your GST clearing account transaction. All right, thanks a lot, guys.